Now let's talk a bit on the rand, seeing it at 8.19 this morning, currently sitting at 8.21. There's been this continual recovery of the currency, really on the back of the pressure that we have seen coming through. Where to from here for the local currency?
Well, good morning. We did see yesterday that the rand gained quite a bit of ground, and it did hit that 8.19, and we saw that happen again this morning. And that's really on the back of the fact that we're seeing that risk on sentiment. We saw the G20 meeting. We saw some very good comments coming out of that meeting with regards to the fact that there's going to be some resolution coming forth, and that the stability in the Eurozone seems to have picked up pace, and that the uncertainty seems to have been settled for some time. But as we head closer towards the FOMC announcement today, we could possibly see some jitters come through from that meeting if we don't see what our expectations are currently telling us. We are expecting the rand to trade within a similar range that we did see yesterday, more or less in the line of about 8.15, but obviously if conditions do deteriorate during the course of the day, we could see that moving up towards 8.50.
You touched on the FOMC later on today. There's talk of a quantitative easing of about $600 billion. Your thoughts of what type of rhetoric could come out of that meeting later on today?
Well, we do believe that the market is looking for some kind of quantitative easing or possibly some operational twist that we did see previously. But what is concerning is the fact that what if that does not actually materialize? We could possibly see risk-off sentiment come through again, and we could possibly see the dollar strengthen, and by virtue of that we could see a weakening in the currency, and that is really what our concerns are all about if we don't see that quantitative easing come through. We also have some local data coming out which could also possibly pressure the local unit.
Let's touch on some of that local data. We have the Q1 current account deficit forecast to come in at about 4.5%. Not really surprising given what we are seeing currently in Europe.
I know we won't be surprised with that sort of number. Standard Bank is also penciling a current account deficit of 4.5%. After we saw that narrowing in the final quarter of last year, we do believe that that current account deficit is on the back of the fact that we saw the trade deficit widen considerably during the course of the first quarter, and there might also be some pressure from the net invisibles account. So we're not really going to, we are expecting a wider current account deficit.
Now, Shireen, it's not just the current account deficit that comes out of the quarterly bulletin. What other factors are you looking out for that could perhaps show us where we are going?
Well, we are expecting the CPI data coming out at 10 o'clock this morning. We are expecting CPI to register at about 5.9% from 6.1% the previous month, and that number is for May. But we are seeing a disinflation trend coming through from both the food prices and fuel prices as well. But what is likely to, we don't believe that CPI print is possibly likely to cause the MPC to react given those numbers. We do believe that the MPC will rather probably react on the fact that we could possibly see growth coming down during the course of the year, but it's also going to place a lot of emphasis on what's happening in the global economy, with particular regard to what's happening in the US economy and the Eurozone and the uncertainties in both those economies.